Welcome back to 7-Minute Options. Today I'm going to be closing my Tesla Iron Condor for a small gain. I'm not very happy about closing it. I wish I could keep it open longer, but I don't feel comfortable holding it for much longer, and I'll go through the reasons why. So as a refresher, the Iron Condor that we have is this position here. For some reason, Tastyworks has not grouped it together, but it's these four positions here. So it's the 570, 580 credit put spread and the 700, 710 credit call spread. And right now, when I established this position a while ago, I just put on the GTC order to buy it back at 350, but right now it's still selling for 478, and there's a couple reasons why that's a little bit surprising and a little bit worrying. But if I look at the history of how we got here, here's the history. So far I've collected $515 in net credit on this, and I can buy it back today for around 470, 475. So that's how I can close it out for a small gain. But yeah, so we opened this position back in April, and then when it moved against us toward our short strikes, I closed out the call spread, and then I rolled it into the June expiration and reestablished the call spread closer to the strikes, so I can get more extrinsic value out of it. And right now, I can close out for a small gain. But I guess the real question is, why don't I just hold it? So right now, actually, this position doesn't look that bad on paper, right? If I look at the position, let's take a quick look at the curve. There we go. So there's my 580 short put, my 700 short call, and this flag right here in the middle, that's where the stock is. So Tesla right now is at 611, and you know, this is actually going well for us. This expires in 35 days, and so I'm a little bit surprised that it's not ahead of where it is. It's still a little bit, it's not really moving in my direction. So the best case I can hope for is that this thing moves toward the middle, which is 640, which would be a 30-point move. And usually when you're selling premium, you can always also hope for that the IV continues to contract. But in this case, for some reason, I don't think that's a realistic expectation going forward. If I look at the graph for Tesla here, this is the implied volatility, or actually the IVR, the implied volatility rank. It is extremely low. I mean, this is the lowest it's been, since this chart goes back a year. It is extremely low. So I don't really have a realistic expectation that IV is going to continue to go down. If anything, it's probably going to bounce around sideways or maybe even go up. You can see Tesla goes through these waves of IV expansion and contraction, expansion and contraction. So ideally, I want to close out the position. I want to buy things back right when the IV is crazy low, wait a week or two as IV spikes like it always does. That's when I want to reestablish the position and sell it again. And so I can't really expect to make any more money from IV contracting. So the only other way I can make money is if I get this thing to move closer to the midpoint, right, between my strikes, which is 640. And even then, that doesn't really look all that great. If I look at the table, how much can I expect to make on a 30-point move, right? So you can see here the delta on my short puts. My short put there is a 34 delta. This thing is a 30 delta. So if Tesla moves $1 away from my short put spread, I can make $4, right? It's the difference between the deltas of my short and long position there. So $4 every time Tesla moves away from this short put. On the other hand, as I'm moving away from my short put, I'm moving toward my short call position. And my short call spread here, you can see the delta is 20 and 18. It's a net delta of 2 because it's further away from the current price. So every time Tesla moves $1 away, I can expect to make $4 from this, but lose $2 from this. So that's a net gain of $2 every time Tesla moves away. So even if I get some magic movement here, like a lottery ticket, and on Monday morning, this thing opens at 640, that's a 30-point move. If I can, on average, $2, that's maybe another 30, $40, right? Because at 640, it won't be $2 anymore. At 640, it'll be exactly zero. And so it's $2 right now per dollar of underlying movement, but that slowly goes to zero as I reach 640. So really all I can hope for is a $30 of more gain on this position if I get that lottery ticket kind of moved to exactly 640 where I need it to be. On the other hand, if it starts moving downward against my short my short puts, then I'm quickly going to be underwater in this position again. So um, again, I collected 515 in credit. I can close it out today for about 478, and I'm just going to take that 30 bucks and just say, you know what, I'm done with this. It's better that I take off this position now, wait for the IV to spike in the next week or 2 or 3, and then try to reestablish another Tesla position if I feel that's a good thing to do at that time. I just don't feel comfortable holding this. I mean, like, when is this thing going to lose money? And the frustrating thing is, um, every single penny of this 478 is extrinsic value, right? I'm in between my short strikes. So one could look at this and say, look, this thing is going to lose $475 of value in the next 35 days, right? Between now and expiration. And so $475 divided by 35 days, that's a theta of more than 10. And it's like, yes, that's true, which is why it really hurts me to close this position. But for some reason, that, of course, theta is not consistent, which means it's slower now and it starts to accelerate as you get closer and closer to expiration. With this position being what it is, let me just, if I were to reestablish this position real quick, you would see that the theta is only about 4 or 5. What is it? Yeah, 4.2, right? So really, I can only expect to gain $4 a day if this thing goes sideways, and not that number will start to accelerate, and it'll increase up to 10 as we get closer and closer to expiration, and we're still in between our short strikes. But again, at that point, I start to take on all kinds of other risk. The other thing is, getting back to the implied volatility, if you look at Vega, right? Vega is how much these options change in value every time the IV changes by 1%. So right now we see that the IV is extremely low. And so that's another risk where if IV starts picking up, you can see the difference here between 68 and 71. So this put credit spread would gain $3 in value from every 1% increase in the IV. And again, I'm the seller here, so that's $3 against me. So if the IV starts picking up, I can easily lose $3 on this one. And what's the difference in Vega here? 51.49, 5 cents on this, $5 here. So for every little uptick in IV, 1% uptick in IV, I can lose $8. So there's a lot of things here that can go against me. There's more things that can go against me than for me. And so that's what I'm going to do. I'm going to take my small gain, wait for IV to pick up, and see where I can deploy my buying power in a better position that's more favorable to me. Right now, there's just not a lot of volatility in the market in general. A lot of the IVs are low, and I just don't want to hold $1,000 worth of risk on something that has an IVR of 2.7. Doesn't make a lot of sense to me. So it hurts because I was right on the position. I did my mechanics right with the rolls. I'm in between my short strikes, and still, I just, I'll do better if I just close it and redeploy my buying power somewhere else where it can help me out. So that's what I'm going to do. So even though I want to buy it back at 350, that's my GTC order. I am going to replace that order, move it back to 475. Actually, what is it at right now? 480. Yeah, let's go to 480. That's what it is right now. And just get rid of it. The Tesla's pretty liquid, and there we go. We filled at the 480. So if I look at the results, so there's my $35 gain. Now, actually, it automatically recorded that position, which is good. So there's 35, and there's quite a bit of transaction costs, right? $4 to open, and half of the positions going forward here are reestablishing and closing. So I probably paid somewhere around 4, 5, 6, somewhere between $6 and $8 in transaction fees. So I'm right around like the high $20, 27 to 29 bucks in total gain. Again, not very happy with that because we held this position since April. So if I'm holding $1,000 of buying power for 2 months, I need more than like $20, $30 to keep the lights on. So I'm not very happy with this position, but I'm looking for the IV to spike up again, and then I'll see where I can deploy that buying power in a better way. All right, that's 7 minutes. Thanks very much.